Have you ever been driving down the road and seen a brand new truck? The kind that gleams and looks like it costs more than a small house. You see it and wonder, how can the person driving it afford that payment? The person driving probably makes a normal salary. They are not a secret millionaire. So how do they manage a car payment that seems impossibly high? The truth is, there is a system at play. A system that makes unaffordable vehicles seem affordable. Understanding this system is key. It helps protect your money from a common trap. This is not a small problem. The average new car payment has soared. It is now over $700 per month. That is not for a luxury car. That is the average. For popular trucks and SUVs, payments often top $900 a month and can reach $1,200. People sign these loans every day and drive off in vehicles that eat a huge chunk of their income. It seems to defy basic financial sense, yet millions are doing it. Regular people with regular jobs. Wages haven't skyrocketed. The real answer is a mix of factors that changed how we buy cars. First, the loan itself. Then, dealer promotions that sound too good to be true, and how people trade in their old cars. Finally, the powerful emotional pull. Car companies have spent billions to make payments feel normal. Your car becomes a statement about who you are. This normalization took years of clever marketing. Commercials sell a lifestyle and a fantasy. You feel like the mountain climber, even if you're not. It becomes easier to justify a payment your budget can't handle. You're not just buying a truck, you're buying an identity. Suddenly, $900 feels like an investment in yourself. But it's a very expensive investment. Yeah. The biggest trick in the book is the long loan term. It used to be 3 or 4 years. Those days are gone. Today, 6, 7, 8 years. Some lenders even offer 10. Spread it out, and the monthly looks smaller. A $60,000 truck might drop from $1,500 to about $900. The problem is what you don't see. Total cost balloons with longer terms. $900 over 8 years is over $86,000, far above sticker. Meanwhile, the vehicle loses value quickly. You can still be making payments years after the value has fallen. Owing more than it's worth traps you financially. Special financing sounds like free money. Often the cost is baked into price, discount or 0%, usually not both. And 0% is typically for perfect credit. For everyone else, rates can be steep, especially on long terms. Many trade in while still owing money. Dealers roll that old debt into the new loan. A cycle forms, paying for cars you no longer even own. Right. The monthly payment is only the beginning. Many forget the other costs that break budgets. First, insurance. Insuring a $60,000 truck costs far more than a $20,000 sedan. Full coverage, collision, comprehensive, and often gap insurance. Easily $200 more monthly, over $500 for 2 pricey cars. Fuel adds $300 to $400 a month for thirsty trucks and SUVs. Normal commutes and adventures push that number higher. Modern vehicles are complex. Computers, sensors, premium parts. A brake job can top $1,000, a transmission $5,000 or more. Without savings, repairs land on high-interest cards. Payment, insurance, fuel, repairs. The true cost is far higher than it looks. The image of success can hide harsh reality. One big repair can make it all fall apart. Yeah. So, how do people make these payments fit? Extreme sacrifices, downsizing homes and sharing spaces, eating cheap while driving something expensive, taking extra work to pay for the very vehicle used to earn it, borrowing from future selves, lost compounding for a depreciating asset, using high-interest debt to prop up a car payment digs a deeper hole. Let's look at the numbers. A $55,000 truck at 7 years, 6%, about $800 monthly, $67,000 total. Add insurance, fuel, repairs, over $132,000 spent for a 7-year-old truck worth maybe 15. Invest $800 a month instead, and you'd likely have over $90,000. The car payment trap is real, but you can avoid it. Look at the big picture. Calculate total cost, not just the payment. Aim for shorter terms, pay less interest. Own it sooner. Put more down to lower risk of being upside down. Don't roll negative equity into a new loan. Pay the old one down first. Get pre-approved to know your rate and negotiate from strength. Think of a car as a tool. A reliable used car can save a fortune. Redirect savings to real wealth, a home, retirement, even a business. Make the smart choice today and give your future self some freedom.